All right, and we are on. Good morning or good evening, wherever you are. Welcome to the show. This is Psycho Silver. My name is Jerome. I do hope that today you're counting your wealth in ounces and also that you're holding your word, especially to yourself. Very important right now. Never been more important than ever. Thank you for joining me. Today, we're going to have a look at the news because that's what we do. We have a look at the news every day in regards to the death of the dollar, precious metals, geopolitics, and also anything else that might catch our eye. We're paying careful attention to the dark psychology of money, the psychology which keeps the bottom 50% with only 2% of the wealth, and they tend to stay that way. Got a bunch of stuff to show you today, but we'll keep it short. It was a pretty crazy Friday, but compared to how crazy all the other days have been, it's actually calm. Any other year, this would have been a super mega huge day of news, but this year, with so much volatility and so much confusion, it's kind of tough to know what to pay attention to. And it's also, you don't get the same sense of an ebb and flow of emotions. As these big events do occur, you would expect more waves of emotion, but the bad news just keeps coming, and we are so desensitized that it's difficult to know how to feel or what to feel or when to feel it. And I think there's a word for that. I'm just calling it desensitization, being desensitized, but I think there's probably a better way to describe that. I'll look into that. Thank you for joining me. Let's jump right into and see what we got going on today. All right, let's jump in here. The first thing we had happen today is the Dow did close 400 points lower, which is a pretty large swing down on the week. And it was so crazy. Yesterday, we did see the Dow and the S&P open way down, and it rebounded for the third most volatile day in the history of the S&P, third in the history. And every day we see a repeat of some of the most crazy circumstances in regards to all markets over and over. It's always something different. It is extreme volatility in all ways right now. And now we do see the US 10-year Treasury firmly above 4%, which is, I think, somewhat of a line in the sand. That's pretty concerning. We've been keeping an eye on this 10-year Treasury. It's an important benchmark, and we do know that each tick higher represents a large amount of cash, especially in regards to other countries that are carrying U.S. denominated debt. And that looks to be at least a recent all-time high here. Let's go back into the chart a little bit and see when's the last time we were this high. Yeah, we would be going all the way back to 2006. 2007 to see rates once again this high. But back then, I think it's safe to say that the economy is much more healthy in the sense that the whole world wasn't so debt laden. Right now, everything's so debt laden that these higher interest rates are really tough for the borrowers to sustain. We also have the UK 10-year bond. I don't think this is the gilt that everyone's had their attention on right here, but let's have a look at this anyways and see if there's anything interesting we can find. That is, of course, once again, near all-time highs, and we did get a little bit of relief recently. That is when the Central Bank of England did step in, and we saw these heavy moves down as the central bank intervened, but once again, we're creeping back up. Let's see, it's been as high as 4.6. So we will be looking at that 4.6 as an indication that all the efforts of the central bank have been erased. That'll be the next line in the sand right there. And having a look at precious metals over here, we see gold creeping back down to 1,650 with the 1.6% loss on the day, and silver getting clobbered 3.8% down to 820. And I did see, we will be visiting this soon. I did see that it was nearly a record day for silver. And I did wish that I have a little cash on the side, because I would be going in on silver right now. It looks like such a great opportunity to be buying. But I already spent all my available cash to do the October raid. So it's going to be a while before I'm able to. It's funny when you're a new stacker, you see moves like this and maybe you're a little disappointed because it means that now you're down on your position in your silver. But the more you hang around and the more conviction you get, when you get that deep internal conviction, you believe in what you see, you believe in yourself. You can only get happy when you see these lower prices, because where we're headed is inevitable. And all this means is more time to accumulate, because it's going to happen once we're in the position where everything is come to pass. And we look back at these times when silver was available at these prices. We're always just going to think about how we could have maybe done more. We could have sold more things. We could have saved a little better. We could have trimmed our budget here and there and accumulated more ounces. It's crazy that there's something that's this for sure out there. There's so many things that are not for sure. And we're going to have a look at this here in a minute. There's interesting tweets about this today. But it's never been a worse time to invest. It's like, where do you go? But people are not flexible. I've talked about this. You have to think in terms of generation. You need to look 200 years back in order to know where to invest, especially when you are in the middle of this is a fourth turning. This is a great reset. This is a great awakening. You have to be able to look deep into the past to know where the opportunities are. If you're a certain age, if you're between the ages of, say, 25 and 50 or even 60, you're probably not used to precious metals being a interesting way to invest or even to protect your assets, because people have been deconditioned. But when you do look at history, when you study history, these things come and go. There's times in history where bonds were a terrible investment and times where it was the best possible investment you could make. There's times you could earn great interest on cash, and other times where the inflation is just going to eat you alive. So you have to be able to be flexible and recognize opportunities. And this goes for crypto too. I'm someone that, I wish that I had done a little more in the crypto space, but it takes a financial education, and it's never been so easy to get a financial education as it is now. You have all these entertaining YouTube videos. Imagine how boring reading all those books must have been 20, 30 years ago to even get yourself some sort of education. You needed to know people. You needed to be going to the right school, or you'd be reading books all on your own. And that's not very fun to sit alone and read. I sit alone and read books, but especially data-driven material like financial books, not many people could do it, but anyone can do it now. And you have to be flexible to be able to recognize these opportunities. And silver is the best freaking opportunity. It's the best. Once again, we're going to keep this show a little bit shorter, but that doesn't mean that there was not a ton of things to look at today. It's absolutely incredible, all the things that are happening at the same time. I do have this interesting tweet here from Dylan McClare. He says, once again, the default won't be happening in nominal terms. The default will occur in real terms as long-dated creditors get wiped out in purchasing power terms. And he writes, phew. I am very interested. I see that this guy is a Bitcoin guy, and I am very interested to see when Bitcoin does adapt the Lightning Network, and what adjustments they make. How much can Bitcoin leapfrog over the competition? One of the big problems that I see with Bitcoin is that there's a lot of competition, and people want to maximize how much money they can make for what. There you have some people that are altruistic and they want to make the perfect money, and you do get those people in the Bitcoin space. But there's a stronger incentive, especially if you're extremely talented, to go and start your own coin. And these people are not messing around. Every day there's better coins that come out. And the problem is that when you base it on a technology, I'm saying when you base your money on a technology, While the technology can always improve, it can always change, it can always be undercut. But when you base your money on a real tangible asset, okay, well, technology can become more efficient at recovering that asset, but there always remains a limited supply in the real world, not digital scarcity, real scarcity. And that's why I'm more of a silver guy. But this guy is really making excellent points here. And I do want to, this chart that he posted here, really good chart. And this is one of the reasons that I like to stay involved in the Bitcoin community. This is one of the reasons why I do believe that, at least in the intermediate, Bitcoin is a solution. We need a bridge. We're going to need several bridges to get us from this current system to the next system. And if the central bankers have their way, for sure, the bridge is going to be the destination, and that's just going to be central bank digital currency, where they track, monitor, and trace all your purchases. You're going to get carbon credits on that. Sorry, sir, you can't buy that. You've surpassed your amount of beef you can have for this week. Oh, is that unpasteurized milk? That is, your carbon credits are not available for use for this unauthorized product, your non-pasteurized milk. This is dangerous. This is a threat. So here we do have this chart, and what an excellent, I knew it was bad, but I didn't know it was this bad. You have US stocks and bonds returns 1926 to 2022. And you see right in his circle here, these have been the three worst times. And the other was 1931 and 1969. And we are just awaiting. We definitely are at the precipice. We are at the precipice. Both of these dates here, 31 and 69, did have major economic events. And he clues us in here. In 1933, you had the Executive Order 6102. And in 1971, it was the Nixon shock. And you do notice by these dates right here that usually the onset, first you get the symptoms, but then they come in with the cure. And sometimes the cure is worse than the symptoms because they want to keep pushing us into where they want us. We're literally being corralled in the money that we use. And there's never been a better time for people to get educated. If you understand this stuff a little bit, like, you have an opportunity to help teach others, and so that they're educated. It's a good idea that if we don't full on resist, that we at least make sure that they don't take this as far as they want to, because I do not think this is a good thing. And I'm talking about the route that they will want to go with the CBDCs. I did see, and I mentioned on my show, it's already such that on different social medias, on Instagram, for example, I've seen that they've already started to attach the little banner underneath posts about the CBDC. If you're talking about it the same way they did with this thing, if you're talking about it, they flag what you're saying with a banner. That even if they agree with what you're saying, it's still flagged because you said those keywords, and they go in and give their official correction to whatever you said. Here I have another tweet from the great Martí. He writes, "The catastrophic financial holocaust we are about to experience is caused by the zero accountability and prosecution towards moral hazard. We're too far gone now. God help us all." And these kind of alarmist tweets, I'm not a big fan of them. I'm a fan of personal empowerment. But the truth is that we've kind of gone too far. Like he said it there. It's tough. I don't really see a way out right now, except to at least prepare yourself, because what they did during the times of the illness, and what they did even before that, and what they're doing now, is making it such that it is irreparable. In a way, it almost looks intentional that this is irreparable. And here we do have a chart that is comparing the S&P from 2008 to 2011, more or less, to where we are right now. And you do see like all these little bumps, and the trajectories and the trend lines are looking very similar. And if this analogy holds up, if this comparison holds up, we did already break that support, and we do bounce against it once or twice before we do get a major capitulation, and we go far, far down. And I've seen many charts like this, many charts comparing 2006 through 2010 to what we're seeing right now. And it's shocking. It's shocking how similar a lot of these charts are. And here's one of the most confusing parts. It's not confusing if you've spent some time tracking precious metals and stacking yourself and becoming familiar with this sort of stuff, but it seems confusing. Here we have a tweet from Michael over here, and he's one of the best contributors to the Silver Squeeze on Twitter. He's giving us all kinds of good information. Here we're tracking APMEX. He writes, it's only 3 p.m. and tracked silver sales at APMEX are at 121,693 ounces with 9 hours remaining. It's already the 5th largest day I've recorded all year, and all likelihood it'll take first or second place by the end of the day. # Silver Squeeze. So we did see in the paper prices that we looked at in the beginning, silver is touching a low. It's all the way down to 1850, and there's a complete disparity between the paper price, what you're seeing on the futures, the figures. The spot price is derived off the LBMA and the COMEX, and even those have discrepancies. But then here you have it over here in the physical world, that silver is just really being rated. And it's not only just that the price is low, it's just that people are coming to grips with there is an oncoming recession, and it's probably going to be a lot worse than that. People are recognizing that it's unsafe in many different areas right now. And because they're feeling that they're unsafe, hopefully a lot of them are doing research for the first time about like, where can I put my money to achieve some safety? And I think there's the best part about physical silver is the crazy upside that's possible there. Here we do have a post from Chris Marcus at Arcadia Economics. He writes, now the U.S. Treasury is just asking the banks what to do. This is according to Reuters. U.S. Treasury asks major banks if it should buy back U.S. government bonds. The U.S. Treasury Department is asking primary dealers of U.S. Treasuries whether the government should buy back U.S. bonds in order to improve liquidity in the $24 trillion market. Investors are worried about reduced liquidity in Treasuries as yields rise and volatility increases in line with rapid rate increases by the Federal Reserve, which is struggling to bring down inflation that is running at its highest level in 4 decades. So we just have pressure from all around. This is the rock and the hard place. Do you want inflation or do you want liquidity crisis? And lucky for us, we're probably going to get both at the same time. It just depends on which side of the seesaw that you are on. Which do you feel first? For many of us, it will be inflation. But later, we'll experience the pain of having businesses all around us suffering in this liquidity crisis. Not to mention, you do get the inflation and you see your paychecks going less and less, buying fewer and fewer things. Your shopping cart is getting a lot smaller for all the money that you spend. But then when you get into the liquidity crisis and you start putting these businesses in jeopardy, all of which are basically forced, it's a really sad thing. Even to just run a sound business, you're taking on debt. These businesses seem like they have a hard time competing if they're just a business that's earning a profit and not necessarily taking on a bunch of debt to have to grow or whatever. And so we have all these businesses that are becoming debt laden. And eventually what happens with the defaults and the liquidity crisis is they will eventually be offering less jobs. And so not for every single person, everyone will have a different story, but the overall story in the real economy is first someone is out there and they're earning a paycheck and it's not going very far. It didn't go as far as it used to. It's getting worse and worse. And then to improve that, you turn around and all of a sudden the business that you work for is not doing as well that it used to. And maybe now you're losing your job instead of losing your paycheck. So it's really tough to win either way. And this is really where I feel like the chickens have come home to roost, like they say. We made a lot of what's the right word? I feel like there was a lot of frivolous and spending that was not well thought out during the crisis, the illness. And they were spending like a rich person that's on a bender, and they were spending and spending. And eventually all that did was just to make the situation that we're in right now even that much worse. Here we have an interesting post. I was taking it off Gab, but it looks like it might have came off of Reddit somewhere, but it's pretty funny with all this cross posting. It's on Gab, and then they took it from Reddit, and I'm gonna take it over here off of Gab and put it onto YouTube. That's just the nature. But I didn't see this post, so I was interested in putting it on my show. Here we have a post. This is the Neon Revolt reposting from, it looks like, Reddit. And this user writes, at the start of the squeeze, there was 150 million ounces in registered at $27.50 an ounce for a total value of 4.12 billion. Now it's 4.8 million ounces at $18.75 an ounce for a total of 765 million, a reduction of 81.4% in terms of dollars. For reference, the market cap of Apple is 2.3 trillion. I really love when they involve things that you can compare it against right here. That's really important. That gives you a good idea about like how little that it actually is. The cost to buy all the silver is $3,400 per ape. That's like nothing. This is turning into a prisoner's dilemma for big banks. Even a small fund could corner the entire market supply at this point. Do you screw over your partners in crime to benefit yourself, or do you restrain yourself, hoping no one else tries to screw you over? The best part is Wall Street silver is its own whale, and we're not on a team hedge fund. No matter how you chalk it up, it really does seem as though that this is your last chance. The rules are going to change. And I do think that the bankers that be do eventually want silver to be completely unaffordable. Right now, I feel as though that they're suppressing the prices, they're ignoring it, and they're letting some of us accumulate because it's really not that many of us. But once the cat is out of the bag and it does have attention, they want it. I feel like they want it to go from one extreme to another. The people that are stacking, it's really an insignificant number. A few people will do really well, possibly get very wealthy off of this, but they're playing the middle. And what I mean by that is once silver does begin to capture the attention of average people, they need the silver. So because they need the silver so much, you're going to see silver move in the opposite direction, meaning that it's going to go so damn high that it's going to be completely unaffordable to an average person to buy bullion. In fact, you just won't find it available. What will be an interesting thing is to see people scraping up all their jewelry, looking for quarters still. People already looking for quarters, but way more hunting for just one quarter, turning in all their jewelry to, there's probably going to be depression at the same time. So you'll have people turning in their jewelry to pay rent, buy food and whatnot, and forget being able to afford bullion. But it's going to be, I feel like it'll probably be a big deal for somebody to find a silver spoon in their cabinet, or you're going to see a lot of entrepreneurs start businesses stripping different materials off of electronics and whatnot where they do carry silver. It's definitely coming. Here we do have a tweet from Bob Coleman, and it's about backwardation in the silver price. And he has a chart to support here. And basically just the backwardation is that usually it's less expensive to buy a commodity at the present time. And then as you move out into the future, it's more expensive to buy it. It's just how markets usually work. But when you see that the price is more expensive right now than it is later, that's usually a sign of some symptom that's in the market. And I don't want to get too lost in the sauce on this one, but I do especially want to point out what they were saying underneath this. Here somebody asks Bob Coleman, what are we supposed to do with this information? He replied, selling is getting extreme on the paper side, while physical market is doing its best to hold the market together. Shorts take notice of this. And then we had another reply underneath that says, here's the other reply. It says, Bob, if your number's correct, isn't that a $950 arbitrage on 5,000 ounce contracts? Yes, it's nearing the same level we saw in August. And all that means there's an incentive to buy and sell it because the current price is just completely out of whack, and makes a lot of sense to go ahead and buy it from the future and then sell it in the present. And you do see the same thing happening between the different, you have different exchanges throughout the world. You have the LBMA, you have the Shanghai, and you have the COMEX. And because the price amongst those three, they're like the three biggest exchanges. There's differences in the prices, and there's opportunity for arbitrage in that one too, because always the spot price has been much higher in the East. And people do speculate that the difference in the spot price has everything to do with Western banks using paper money to push down the price and ensure the silver does not begin to get the attention of the masses who would scoop it all up. You have the big banks who want to slowly take as much off the market as they can while maintaining the supremacy of the dollar. And by keeping the price of silver low and keeping it nice and quiet, that gives them opportunity to just slowly pull out more silver, slowly pull it out, and at the same time, not have any big waves, no red flags where people do start to catch on and go and start trading in all their dollars for real money. That's what we're doing, is we're trading in our fake fiat money, our dollars that used to be made of silver and gold. Well, we're going back to silver and gold if you're smart enough to know what's going on. If you're here right now, you're one of those people. And we're very fortunate. I don't know how fortunate we're going to be. I think there's a high chance we're going to make a life-changing amount of, I don't know if it's going to be profit, but it's going to be an increase in value. I won't even call it profit because that's not even the right way to look at it. You're just going to see the values of things shift, and the value of silver is going to shift in such a way that you're going to be able to trade it for way more things. Here we have a tweet from the Happy Hawaiian. He writes, the 1 year, 2 year, and 3 year treasuries are all trading at 4.5%. With debt at $31 trillion and rising, the vast majority of it is centered on the 1 to 3 duration range. These fucking dumbasses set off the debt death spiral, reducing inflation near term and making it much worse in the medium or long term. I don't think that they envision us making it to the medium or the long term in the current system. The system's going to need to be reformed before the medium to long term. This is short term. We are coming to grips with we're coming into contact with whatever the next thing's going to be, whatever they're going to try and make it, whatever we can make it. This is happening on the right now side, probably 1 to 2 years, in my opinion. And we did see yesterday they had the CPI number, and I believe that it was 8.2, meaning that your purchasing power of the same amount of money lost 8.2 of its value since last year. But there was some things here that ran especially hot. Not everything went as much as others, but you do see flights at 43%, eggs at 31%, medical insurance 28%, butter 27%, flour 24%, gas 18%, hot dogs and coffee 17%, cereals and electricity 16%, cookies 16%, bread and milk 15%, animal food, that's important, 14%, rice and chewing gum at 14 and 13 respectively. So not everything went up. Some things went up way more than 8%. And to me, this seemed really significant. This is another thing that I've really wanted to keep my eye on. We do see the consolidation of agriculture, but it's not just agriculture. Here we have Kroger merging with Albertsons in a $25 billion deal. And I don't even know how to feel. Like that's a super huge number, but at the same time, everybody freaking eats. I feel like some of these businesses that serve people, that serve their most basic needs, such as food, in a way, I mean, that's a super huge number, but everyone's got to eat. And I do feel like a lot of these businesses are still undervalued in a lot of ways. We know that the commodities businesses are definitely undervalued, but as far as just as the infrastructure that delivers food and things like that to people, also undervalued in my opinion. But here we do have an interesting deal between Kroger and Albertsons for $25 billion, and they're facing antitrust. I would be curious to see if they're actually going to go after them for antitrust. I just doubt it. I don't know, but that's very significant because now you see the retailers consolidating. We saw it's been a trend for decades that the agricultural grow processes are consolidating, and oftentimes they're using government restrictions They're using all this policy to make it tough for the smaller growers. And now it's just like everything has to be done under a big grower because the amount of restrictions, amount of the bureaucracy, and all the fees and licenses you need to just grow some fucking food. We've seen that consolidating for quite a while, but now we have two massive retailers consolidating. And what does that do to your supply chains? What does that do to the amount of you? I feel like the growing system needs diversity in it as well. And by diversity, I just mean you need a variety of companies and individuals experimenting with different ways to grow. And when you have these major consolidations, I just do worry that because of the consolidation, that there's not enough variety. Like the same way you just need variety of genetics for a species to stay healthy. In case there's one thing that inflicts one, it won't inflict the other. Well, when you see something so important like the retailers, which isn't just the stores that you shop in, but also the supply chains and the growers that they have contracts with are so important. What is this going to do? I don't know, but it's something to think about. I'm a little more familiar with this industry right here. So this is something that I see myself looking into quite a bit. Interesting. And this just happened. Very interesting. I did pick up this article from the Epoch Times. It reads, China, Russia could launch Space Pearl Harbor on aging. What's that say? China and Russia could launch Space Pearl Harbor on aging U.S. satellites. According to an expert said it, guys. The United States is not prepared for strategic space competition against a united China and Russia, according to one expert. The Chinese Communist Party is nearing a technological parity with the United States in key space domains, according to Brandon Winchert, an independent geopolitical analyst. That means it will soon threaten the United States' ability to project power in space. You're already seeing China able to catch up with us in certain areas, Winchert said in an October 13th interview. They are still able to do things that we were not anticipating that they would be able to do, such as getting new space station of theirs in orbit as quickly as they did and getting many of our key allies to sign in on support the new Chinese space station. And this is just the beginning. If you merge the Russian and Chinese space power together, you now have a real challenge, not only to the United States, but also to our very powerful, dynamic private space companies. Who could he be talking about there? We're in a position now where Space Pearl Harbor, a surprise attack by Russia or China or even Iran or North Korea on our vital yet very vulnerable satellite networks could happen in any moment. It does make me wonder a lot about what a potential war would look like. It seems we do have the Space Force. It seems as though the space supremacy would be very important. It's great to be able to use satellites for getting an edge over the competition, but they need to be working. And it would seem as though, I don't know anything about this, but it would seem as though that things like that would be very vulnerable in space. And you're probably not looking at the same geopolitical backlash for an attack on us. An attack on a city and on people, I think, would draw enormous outrage, especially with large weapons. But I would assume that the international community would be more tolerant of a space attack. And that's just where it's headed right now. This is very interesting. More things to keep an eye on. This is one of the most important things that I watch all the time. I love when we get updates on this. And we have different users on Reddit giving us some updates on this. One user writes here, this is Exploring Finance, writes, COMEX update. Platinum has gone too quiet. Just like the silver after technical default, Platinum has gone incredibly quiet since almost facing a delivery request greater than the available register. See my post a few weeks ago. Take a look at some charts below. This shows the delivery volume in major months. You can see that the current month is way below recent months. Platinum has some minor months with decent net new contracts, but the biggest thing to notice in the chart below is what happened in the final day before first notice on the October contract. This is the difference between blue bar and green bar. Some were big drops in 2021 from a percentage standpoint, but last month we saw a massive reduction. So what do you guys think is going on? Did the market just lose interest in Platinum incredibly quickly? Did something happen where 2 years of Platinum action suddenly grinds to a halt? Does it have anything to do with the minuscule supply of registered platinum? Did a memo go out and say, hey guys, lay off the platinum for now? We don't want to shake any confidence. I have no idea, but probably not. I just can't figure out what's driving the massive change in the trend with platinum and what happened right when it looked like we could see a volume in excess of the registered. What's your guess? I mean, it's very simply that I think the big banks that work closely with their biggest customers, you have these big industries that are taking the platinum, they're working together and they're saying, hey guys, if we do shake confidence, if we do signal to the public and everyone else, all our competition, that the platinum is running out, well, that's just going to cause people to want to buy even more. And what we need is to just keep it nice and quiet while we slowly accumulate in peace. And so, yeah, we're not doing huge deliveries. Let us refill, let us replenish a little bit and just get back to us. It's very touch and go right now. That's probably what's being said, in my opinion. And it's the same thing with silver. But the big difference is that I don't look at platinum like money, and I do look at silver like money. It's not like money, it is money, right? Here we had a post from Reddit. This is Wall Street Bets. This user writes, the next big short is Tesla, a price target of 40. And there you do to me, that's pretty convincing technical analysis right there. You do see, we did touch that trend line. I don't know if we've actually broken it, but that looks like a pretty solid head and shoulders formation right there. And we'll know what happens once we break this trend line right here. But I did see some funny comments on this one. I want to show you guys a couple of the comments. This user writes, your mom's a large and volatile base. And the user under that wrote, the quality comment that we all wanted to see. Here's your upvote. And then the next comment underneath that, Blood Priest writes, can we get a motherfucking Kathy Wood emoji? Oh, that's so good. And then underneath it, Holiday 22, 13 hours ago writes, the joke's on you, bucko. This person has 2 heads and 4 shoulders. That means he got 3 more bull humps to contend with. This one is actually pretty low-key funny too. This user writes, LOL, no, the fanboys will prop it up and won't let it get that low. Maybe it hits 150, but then Elon will announce he's finally launching the Cybertruck and he's personally going to nut on the driver's seat. And then Tesla runs back to 1K a share. He's going to re-announce the Cybertruck. Yeah, that's, or maybe it just runs up because the increased, once the Twitter buy goes through, who knows? It might just shoot up the Tesla price too, because it's completely irrational. There's no rationality whatsoever right now. Funny stuff though. It's almost worth it. If you're into this sort of stuff, I don't really like to gamble with my money the way that they do on Wall Street Bets, but it's so fun to get on there and just read the comments. It's definitely more entertaining than watching Netflix to me. I just find that to be so funny. And here we do have an article from the New York Times. I thought this was really important right here. They write, with new crackdown, Biden wages global campaign on Chinese technology. U.S. officials push to choke off China's access to critical semiconductor technology after internal debates and tough negotiations with allies. In conversation with American executives this spring, top officials in the Biden administration revealed an aggressive plan to counter the Chinese military's rapid technological advances. So we're seeing it in the chips and we're seeing it in space. China was using supercomputing and artificial intelligence to develop stealth and hypersonic weapon systems and tried to crack the U.S. government's most encrypted messaging, according to intelligence reports. For months, the administration officials debated what they could do to hobble the country's progress. They saw a path. The Biden administration would use U.S. influence over global technology and supply chains to try and choke off China's access to advanced chips and chip production tools needed to power those abilities. The goal is to keep Chinese entities that contributed to potential threats far behind their competitors in the United States and allied nations. To be honest, I'm fairly surprised that we do see Biden taking such aggressive action. And in a way, I almost don't really trust it. I am suspicious. I want to believe it. It seems like a good thing. It would be good to do whatever is best for us, but part of me, I just have a hard time believing. I'm so cynical. I thought this was an important tweet here. Curtis Porter writes, poll people and ask which they believe is larger, the bond or the stock market. You'll be amazed by the results. And I would just assume that the average person believes the stock market's bigger and more important than the bond market. And we only got a couple more tweets here. Here's a tweet from Michael Gayed, and he writes, the bond crash is infinitely worse than the stock market crash. The U.S. aggregate bond ETF, AGG, a proxy for the highest quality bonds, is in a crash. If this continues, we have more to worry about than the value of your portfolios. The end of the world is the bull case. And let's have a look at this chart. That is super crashy. That is so ugly. There's no way you can look at this and see any type of turnaround or pivot, especially with the conditions of the interest rates. We've seen that the Federal Reserve and the Treasury seem like they're really dug in on raising interest rates, keeping them high. But my gut feeling is that there will be a crisis, there will pivot, and we will go back to the dishonest way of having a default, which is hyperinflation. We're still going to all default, but it's going to be slower and probably equally as painful. And it'll just be in the way of a currency devaluation, a slow motion currency collapse is how it's going to happen, in my humble opinion. And to wrap us up tonight, we do have a post here from Michael Gayed. He writes, your parents are primarily allocated to bonds. They're going to need to live with you soon. Few. All right. I do appreciate you for joining me tonight. We're going to wrap it up right there. Thank you so much. I believe we're probably close to about 30 episodes of Psycho Silver here. And I do hope that I'm serving you. I'm trying as best I can. Please leave me feedback. And the goal is that we will be growing this channel to a point where we can get on some interesting guests. That's what I'm hoping for. I would appreciate if you were to hit the like button for me if you did make it this far. And if you didn't make it this far, that's fine. Someday soon, everyone will be making it all the way to the end because I'm going to continue to improve this show as best as I can and make it entertaining to where people are interested. I do hope that tonight you are in good health. And if you're not in good health, I hope that you get well very soon. I truly want this for you. I do appreciate you, and you have a good night, and I'll see you very soon.